definition of SME was revised. According to Bank Negara Malaysia, the introduction of new definition of SME was necessary. This is because the economic changes such as price inflation, structural shifts, and business trends have taken place over the years. As indicated in the SME Annual Report 2013 and 14, it is important to establish an appropriate definition in order to identify the target group for assistance. Not to forget, the size of establishment was defined based on two criteria, which are annual sales turnover and the second one, the number of full-time employees. In general, according to the new definition of SME, an establishment will be classified as SMEs if annual sales turnover is less than 50 million or employs less than 200 full-time employees. However, this new definition of SME was adopted only for two sectors, namely manufacturing sectors and services and other sectors. From this table, you can easily recognize and classify which kind of business you are exercising. This revised definition of SME, however, excludes the following. First, a company that is publicly listed in main board in Malaysia or other countries. Second, a subsidiary of public listed company in main board in Malaysia or other countries. And the last one, a subsidiary of large firms, multinational corporations, government-linked companies, Ministry of Finance incorporated companies, and state-owned enterprises.
Financing need of SME. Why SME needs financing? Firstly, the purpose is to start a business. Startup stage business will need more funding. Most of directors of the company will use their own funding. However, it is very slim chances to gain profit. It is hard to secure bank loan because banks do not have any track record for startup business. Next is to have enough working capital. The key to the growth of the company is to have enough working capital, or else the company will have to face a serious impact in the future. It will have to seek for external funding such as bank loan or other internal funding. Lastly, SME need financing to do an asset purchase. In order to improve the efficiency of a business, purchasing a new asset is a need. As instance, new IT equipment will get to help employees to perform their tasks more efficiently. And for manufacturing business, new machine will enhance the production capacity and quality of the product produced.
Let us proceed with financing problems. Nowadays, it is nearly impossible to keep a small business running with money drawn from your own pocket because any type of expansion requires extra working capital. The fact that it is becoming increasingly difficult for small business owners to secure funding through a bank make it even more challenging. There are a variety of reasons why banks are declining loan requests from small business owners. The first reason is due to improper record keeping. We could assume that the level of awareness on financial management among managers in SME is poor. Other than that, there is no statutory regulations for the SME's financial information to be publicly disclosed. Although this may indicate that there are no violations of the statutory regulations, but somehow it demonstrates that SMEs are not being responsive to the importance and safety of accounting records. Next, the management of SMEs may feel that they do not oblige to adhere to such regulations since they are just small enterprise. In other words, we could say that most of them do not follow the Malaysian financial reporting standards in preparing their accounting information. Why does good accounting practices are likely to bring significant improvement to the SME's operation? This is because banks demand a solid track record of generating profits over a specific time period in order to receive funding. Without that solid operating history, SMEs will be likely got rejected for a loan application. The second reason is lack of collateral. For SMEs, lack of sufficient collateral excludes them from obtaining financing because loan applications usually include a request for a viable piece of collateral in order to complete the transaction and receive funding. As small businesses cannot offer adequate collateral, the bank are unable to determine whether the borrower possesses the technical, managerial, and marketing skills to generate adequate cash flow and service the loan.
Next, let's talk about measures to ease the financing problems of SMEs. The first measure is government aid. What is government aid? Government aid is an initiative to help individuals and businesses, especially SMEs, cope with their financial burdens. Examples of government aid given by the authority from Budget 2021 are Permai Special Prihatin Grant, GKP, and Penjana Kerjaya 2.0. Permai Special Prihatin Grant GKP. The purpose of this initiative is to help and provide additional financial assistance to SMEs and micro entrepreneurs. It is actually an extension of the GKP 1.0 and 2.0 last year, where SMEs who have previously registered will receive a one-off payment. New applicants of SMEs can also receive this one-off payment. With current situation of our country battling the COVID-19 pandemic, SMEs registered in states under MCO, Movement Control Order, will receive amount of 1,000 ringgit, while the SMEs registered in other states will only receive 500 ringgit. Penjana Kerjaya 2.0. The objective is to promote the creation of quality jobs and reduce unemployment among locals. There are many rates of incentives under this program. One of them is employers will be given an additional incentive of 60%. This incentive is meant to encourage job opportunities for people with disabilities, those who are unemployed long-term, and workers who have been terminated. Next incentive under this program is employers who hire talents under Penjana Kerjaya can also claim a maximum of 7,000 ringgit for staff's training program. This only applies to those with employees undergoing a professional certificate program. The next measure is government grant. What is government grant? Government grant is an assistance by government in the form of transfers of resources to an entity in return for past or future compliance with certain conditions relating to the operating activities of the entity. Examples of government grant given by the authority is Skim Kredit Pengeluaran Makanan (SKPM) and Prosper Usahawan Muda (PUMA). The SKPM mostly funds loans towards who wants to develop more on the food business background or food industries in Malaysia. The purpose is to help food production of SMEs to enhance their productivity and reach the business to a higher market level. With this program, SMEs receive a loan up to 100% of the total project cost, which could reach a maximum of 500,000 ringgit. The rate has been fixed at 3.6% per annum and the duration is of 8 years. PUMA is a program providing funds to young Bumiputra to begin their business while scheduling them under several training programs. PUMA help these entrepreneurs to develop their entrepreneurial skills and assist them to choose their ways of approaching the business market. Under this scheme, Bumiputra wanting to venture in their own company are provided with funds up to 100,000 ringgit. The funds will be running for maximum 10 years and it is based on Sharia concept.
Sources of financing for SME and the financial impact of finance on SME. SME's owner, family and friends are one of the sources of financing for SME. This is potentially a very good source of finance because they may be willing to accept a lower return than other investors as their motivation to invest is not purely financial. Meanwhile, the key limitation is that the finance that we can raise personally and from friends and family is somewhat limited and could lead to misunderstandings. The next sources is trade credit, where one business provides a line of credit to another business for buying goods and services. The advantage are it can help start-up SMEs to get up and training. It can be useful for new businesses that is unable to raise funding or secure business loans yet need stock quickly. Trade credit can increase the company's reputation. A good trade credit history enhances suppliers to treat the company as a preferred buyer. But this is only a short term, and if the suppliers has identified the company as a potentially risky SME, the ability to stretch the credit period may be limited. It will give negative impact on credit rating if the company misses the deadlines. The business will face a problem when they later seek to raise finance. Last but not least, bank finance. The main advantage of bank finance, as with any kind of small business loan, is the ability to get an injection to their cash flow without losing any control of the company. Other than that, the interest rates on a small business bank finance can be more favorable than other online lenders, especially if the business are looking for a more long-term funding option. Taking out a bank finance will normally work out much better value than using an overdraft, credit card, or a personal loan. However, banks can be cautious about lending to small businesses. Their strict lending criteria can make it particularly difficult for startups and newer businesses to be accepted for a loan, as they don't have the financial or trading history to back up their application. And if they are accepted, the interest rates are likely to be increased to compensate for the added risk. Furthermore, a company can only use the funds for certain projects or purposes that will help to grow the business, and not usually to cover any ongoing expenses. Bank will want to lend to businesses that will be able to repay the money, and so they will look for businesses that will use the money to invest, grow, and generate returns.